Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, September 5th, and you are tuned into the Friday Chart Fix. Thank you very much for joining us. I do appreciate it. So today we're going to cover new highs versus new lows. New highs are still outpacing new lows, and that supports the bull market. We'll see the communication services sector is leading with new highs in relative strength and strong breadth. Then we'll look at the equal weight technology sector. It's consolidating above resistance. That is net positive. And even more positive, I think, is the leadership we're seeing in the equal weight consumer discretionary sector. Then we're going to turn to gold, and we're going to dissect the ascending triangle that formed from the end of April until the beginning of August. Yes, the beginning of August, because this pattern was working throughout August, and there was plenty of time to anticipate that surge, and we'll look at that. And then we'll finish with Zscaler, which has a classic bullish setup working. So before we hit the charts, I just want to make a little note. Of course, we do have the employment report later today. Probably by the time you're seeing this video, the employment numbers will already be released. Sure, employment matters. Sure, the Fed speech matters from 2 weeks ago when the market surged after Chairman Powell suggested that rates could be cut. Sure, this does matter, but you know what matters even more? The price chart, because price is the ultimate arbiter. And I would suggest you take a step back from whatever the market reaction is to the employment numbers today and keep perspective when you're looking at that chart. Identify the overall trend. See if that ETF, if you're looking at it, or stock is showing relative strength. You want an uptrend, you want relative strength, and then you want to look for some sort of tradable setup. So keep that perspective and keep price at the forefront, because price is the ultimate arbiter when it comes to trading. So this first chart here shows the S&P 500 in the top window, and then we have new highs for the S&P 500, new 52-week highs, and new 52-week lows with the histogram there. And you can see there towards the end of July that new highs got above 50. And that's kind of a milestone, because that means more than 10% of stocks in the S&P 500 hit 52-week highs. Now, we haven't been back above 50, even though the S&P 500 continues to move higher. That's a bit of a concern, but we also have to look at the actual net of new highs versus new lows, and we can do that with the high-low line. And this is basically a cumulative measure of new highs minus new lows. So this line rises as long as new highs outpace new lows. And at the end of the day, that's what we want to see at the very least. We want to see more new highs, more 52-week highs than 52-week lows. And as long as that is the case, then that supports the bull market. And you can see this high-low line turned up there, crossed this 10-day EMA on May 2nd, and it's been rising ever since. And as long as it continues to rise, that means there are more 52-week highs and 52-week lows, and that supports the bull market. Now, if we get a move below this 10-day EMA, that's going to be a negative, and that could suggest that the market is going to either correct or turn lower. But we'll cross that bridge when and if it gets here, because right now this indicator is bullish until proven otherwise. The communication services sector continues to lead the market, and it remains in beast mode. This week, it was powered by Alphabet, which had a big move. And if we look at this chart, we can see that this one has been leading since the end of April, early May. Because if you look at the price chart here, it was one of the first to break back above its 200-day moving average and clear that April 9th high. So that was in late April. So that right there told you something was up with communication services. And then you see this blue dashed line. Well, that shows when the percentage of stocks within the sector got above 60%. And that is bullish, because that means the vast majority of components are in uptrends, and that supports the uptrend in the actual SPDR, XLC. Then if we look at the bottom window, we can see the relative performance line. This is XLC relative to the equal weight S&P 500. This line has been above its 200-day moving average since September 2024. For a year, it's been showing relative strength. It had a little dip there in February, March, but turned back up in April and hit new highs in June and August and September. So relative performance is also strong. So if we look at this price chart here, I don't see anything except a really strong and leading uptrend. Yeah, maybe it's a little bit short-term overbought, so wait for a pullback perhaps to play. But as far as momentum and leadership is concerned, XLC is one of the best performing ETFs right now. So here's the main commentary page at Trend Investor Pro, and I just want to show it to you to give an idea of what we're covering throughout the week. This past week, we went over SPY and QQQ and XLK. They're maintaining their uptrends. We gave you the key levels to watch there. And then we looked at 10 tech-related ETFs and marked the key levels for those. We're still seeing leadership in mid-caps, small caps, regional banks, and there's a setup in utilities. We also covered alternative ETFs, which we do every week, and that included gold. And we've been watching gold since it formed that ascending triangle, which was really taking shape as early as early August. It started from April to August, as we're going to see later on. But we got breakouts in gold, silver miners, gold miners. We focused also on copper and uranium. Uranium is getting a move, and we were watching that one just before it broke out. We also update the market regime, which has our market timing models using breadth indicators. And we also feature stocks. This week we featured Amazon, Dutch Brothers, Disney, Leonardo, which is an aerospace firm that makes drones. We had Elf Beauty, as well as Edwards Life Sciences and Qualcomm. So check out trendinvestorpro.com if you'd like to learn more. Now I want to look at the equal weight technology ETF, RSPT, because it is consolidating above its high. It's consolidating near a 52-week high. If you look at this chart here, there is resistance from that February high, and there's the breakout and the 52-week high there in June. So we basically had this huge surge, and there's the gap and break above the 200-day in May. We saw a lot of that in May. Then we pushed to new highs, and we've since consolidated. And you can see from the blue shading, I've marked this consolidation. I've marked the move from the April low, and it looks like a flag. It looks like it is consolidating after a big move, and a breakout would signal a continuation higher. Now, if you're a pattern trader, that's what you're going to see. There's another way to approach this, and that would be from the mean reversion aspect or mean reversion angle, if you will. And what you can see is you got support here just above 40. And if we broke here, that would be negative, okay? That would reverse a short-term uptrend or break the support level of this consolidation. Okay, that would be negative. Would it be long-term bearish? No. And it would maybe set up the next mean reversion setup, because you can see we're still above the rising 40-week moving average. This is a weekly chart. So we're still above the rising 40-week. As long as that's the case, we're in an uptrend. And so if we pulled back to this 39 area and got an oversold condition, that could be a mean reversion opportunity. And to get a mean reversion opportunity, you have to look at the chart or use an indicator such as RSI. And here we've got RSI 5, which is 5 weeks. And you can see in April, it dipped below 30, and in July, it dipped below 30. And those were oversold conditions, and you can see you were above the 40-week moving average on a closing basis when you had those oversold conditions. So you look for an uptrend, and you look for an oversold condition, and that means there's a setup on the chart for a possible rebound and continuation of the uptrend. If you look here in March, we got oversold with RSI below 30, but we were below the 40-week moving average. So that didn't count. We don't take oversold conditions when you're below the 40-week moving average or in a long-term downtrend. So if we look forward now, we're not near oversold yet. We're still above 70. But if we get into this 39 area and we get around 30 and oversold, that could be an opportunity for technology. So here's the equal weight consumer discretionary ETF, RSPD, and it is hitting a 52-week high. And when this sector is hitting a 52-week high, things can't be all that bad because this sector includes housing, autos, retail, restaurants, travel. So these are really cyclical sectors that are dependent on the economy. So for whatever reason, this sector is hitting new highs, and I don't think that can be negative for the broader market. If you look here, you can see there's the surge off the April low. You had a pennant into June, and then the pennant breakout, and then the breakout to 52-week highs. In the indicator window, we have the ratio of the consumer discretionary sector relative to the consumer staples sector. So consumer staples is a safe haven, and consumer discretionary is the risk-on asset. Consumer staples is the risk-off asset. Well, you can see here, you turned up sharply in April and broke above the 40-week moving average in May, stayed above that 40-week, and hit new highs. So discretionary relative to staples hitting new highs, that suggests a risk-on stock market. So now let's look at gold, because gold has been a stellar performer over the last 2 weeks and throughout 2025. But it went through a long consolidation period that maybe put a bunch of traders to sleep, but it was a bullish continuation pattern. Not only that, it was a classic bullish continuation pattern. So you can see this big move starting in January. You move from 240 all the way to 320. So, this big move up in April, very overbought. And so you start pulling back. You have a pullback, you have a bounce to resistance, you have a pullback, you have a bounce to resistance, you have a pullback, and then you get a little bounce in early August. And so you see these solid lines. That shows you what the pattern was looking like in early August. And we pointed this out on Trend Investor Pro. It's a classic ascending triangle. That's a bullish continuation pattern that is confirmed with a break above overhead resistance. And it was forming in early August before the breakout. Now, if we look at this pattern, here's what it's telling us. You basically have overhead supply. So you have resistance here coming in that 317.5 area with 4 peaks. And then you can see you have this first low, but then we have a higher low. And that higher low, this is the demand line, basically. This is the supply line up top. This is the demand line. The demand line is rising because you have higher lows, because buying pressure is coming in at a higher price. So buying pressure came in at 292.5 here. It came in at 300 here. It came in just above 300 here in July. And it came in around 305 in August. So these higher lows show demand coming in at higher levels, and that's positive. And then, of course, we got the breakout with the big surge over the last 2 weeks. Now, you can also try to trade this pattern when it's developing by looking for oversold conditions using like %B, which we use at Trend Investor Pro. There were 3 oversold conditions during this pattern. And you can also look for a breakout to time the swings within the pattern. And you can see we had the last swing was down there in August, into mid-August, and then we turned up and we had that long white candlestick and that breakout around 310 on August 22nd. And we pointed that out in the last week of August just before this breakout. So you can try to get the jump on a bigger pattern by timing the swings within that pattern. So keep that in mind going forward. And finally, I'd like to highlight Zscaler. It is setting up with a bullish pullback after becoming overbought. So if we look at this chart here, again, we got weekly candlesticks on Zscaler. We had the massive breakout there. It's breaking out to 52-week highs in late April. 52-week high in late April. That is pretty bullish. See, there is the April high from 2024. And that is a 52-week high. You surged around 80% from that low to that high. Very overbought. You have an 80% move in 12 weeks. You don't need an oscillator to tell you you're getting overbought. And so we got a pullback in July, August here. And into September, we're down already this week in September. But if I look at the overall pattern, we're still in an uptrend. We're above the rising 40-week moving average. We just hit a 52-week high there in June. And you can see we're forming a falling wedge. And the falling wedge is typical for a correction within an uptrend. You have a big move up, you correct with the wedge, and you can see we're retraced around 38 and 38.2%. I typically use 1/3 and 2/3, 33 and 66%, with 50% being the base case. But once you get into that 1/3 to 50% range for a retracement, that's when you want to go on alert. And you go on alert when you see a falling wedge. And you go on alert when you see an oversold condition. And if we look at RSI 5, you can see it hit 31.39. Not quite below 30, but pretty darn close to becoming oversold. So that's why Zscaler is on my radar. And now I'm just looking for some sort of upward catalyst to reverse the fall of this wedge. And that would be a break above 285, or you can go to the daily charts to try and get more granular and time it a little sharper. All right, so that is a wrap for the Friday chart fix. Just a reminder, there's going to be an employment report today, and it's probably going to move the markets, but try to take a step back, look at the price charts, see what the trends are, see what the relative performance is, see what the setups and the signals are. So thanks very much for tuning in. Check out trendinvestorpro.com if you'd like to see more reports and videos like this. Thanks again and have a great weekend.